What is up? Let's go. Good morning. I got my lights and sounds going here. Man, what a great day, you guys. Oh my God, best day ever. Wake up, it's chilly, it's lovely outside. Ooh. Starting to lose my voice. I'm a combination of the new kittens and cooler weather. I'm talking a lot. Rocket Scooter waking up every day. You guys, what's going on in the market? My own personal trading challenge starts next week. I did one of these last year. It's going to be a fun time. Let me go ahead and get everything ready here. I notice in my older years, I've lost the ability to multitask sometimes. So if you see me trailing off while I'm talking, oops. Let's go. Okay, irrational market open. We have bank earnings today. Opening us irrational and downside. Indicators will lag. Technical indicators will lag. Rational from bank earnings. Indicators will fail. Everything's unpredictable, choppy. Good direction today. All right, so remember, rational markets mean all your indicators are going to fail. Trying to chase, trying to do anything, trying to predict anything with them. It's going to be a hard time. You know how that goes. You need to wait for those nice, clean, rational signals to give us the go ahead, right? All right. Sometimes I just wish Twitter had like 10 more characters. You know what I mean? You get a nice, beautiful tweet ready to go, and you're like, I have to delete 10 letters. Which word do I need to abbreviate? Meaning from. Let's get rid of the word from. Beginning of day. I know. Choppy. Unpredictable. And you have to use like broken English without the word and or to. It's choppy. Yeah, unpredictable. Perfect. Sweet. Let's go. Oh, I get the picture in there. Boom. Here's the levels. Okay, let's give you guys the levels really quick so y'all have them. You guys know the irrational levels for the S&P and NASDAQ today. Let's go super quick. Okay, so today the NASDAQ rational numbers. So rational has to do with the futures market moving beyond kind of these hedging limits we talk about. You'll see that there's a stability. That the market has when you're inside of these boundaries. And outside these boundaries, the market just has unpredictable and choppy volume. You don't have a clean, nice little volume profile distribution. Volume distribution of volume profile. I wonder what's going on here with my stream. Oh well. Let's go ahead and skip the intro in a second. The rational ranges. Yeah, put them here. All right, we'll type them in chat so you guys can have them. What you do, these are your band limits. Eliminate vowels. That's true, that does help. I know, right? That's what I was wondering too. Yeah, well, whatever. Let's go. All right, so how the band limits work. This was the catalyst from yesterday. If you guys remember, we measured a catalyst. Yesterday had a really, really, really cool. I'm gonna show you guys something pretty neat. If you go down to, let's go to the Discord. I've inside of here. The Discord's been reorganized. I'm gonna share with everybody really quick. Do you like the new logo? Yeah, individual stocks themselves will do what they're gonna do. That's the one thing when irrational. The stocks will do what they're gonna do. They likely, if they lose momentum, right? A stock with a good catalyst will do what it's gonna do all the time. That's why individual stock catalyst or individual stock momentum is one of the middle tools inside of our hierarchy of our decision making here. So we go down to the real new names here. Handbook. So we've changed it to handbook. Individual stocks themselves will outrank things going on with the index. Like a company's earnings or something, a company that's bull long up will still be a bull long up. The index doesn't drag stocks down in a way, like they don't correlate that way. The index and stocks, the index tracks the sum of the stocks. So really the stocks pull the index around. But if people are selling the index and the index products, right, like SPY, and SPY's coming down, it's likely because they're selling everything else or they're getting squeezed out of SPY, one of the two. And if a stock loses momentum, they still kind of can pivot with the SPY, even if it's a bullish setup with an irrational day on the index. It won't have that strength that you want. And it itself can be subject to choppiness of people selling or unloading the SPY, or also selling and unloading all the other things they have in their firm. I'll keep that up, keep a note of that. Okay, so if y'all like the new layout of everything, let me know, because we've reorganized all the stuff that we've made. You're gonna notice that the trading chat and members area is much, much, much smaller. That's good. I think it's great. Members start here. I want everybody to do this. If you're in the free trial, make sure, by the way, click the like button, all you folks that are here today. We're gonna have a really short stream, and then we're gonna immediately go into training. We're gonna do a lot of training today. So I'm gonna start off the first day of the first week of the 1 week, first week training of the 4-week program. So we've divided it into 4 weeks now, so that it's more linear and easier for you to follow. I'm gonna go through all that today, non-stop. So in here, we've divided everything into a couple of categories. General entry and exit strats. These are going to be your things like where your liquidity maps are, where your monthly maps will be. There's a video on that now. So this is the video we made. You guys can visit that and take a look at it. The general entry rules for different styles of trading. This is going to be reorganized as well. But these are just the bigger things, like what dynamic is, golden is, how gap fills are, just generic strategies that apply to all. So these are specific day trading strategies. If you're a scalper, day trader, futures trader, options trader, doesn't matter. The strategies are going to be all designed in different ways. So you'll find where you are, and it will direct you to, here's an example. If you were an index options trader, these are tools and the types of indicators that would be useful for you. This is like your 2-page curriculum, and all the bots and indicators have moved down here. The rules and handbook have been down here, so we'll have all kind of new stuff. And the reason I pulled this up is I'm going to show you that yesterday we had a very good example of velocity logic trigger. Very rare that we can capture one of those, not only on the time chart, okay, market's opening in 1 minute, but the tick chart, but the time chart triggered as well is very cool. This is one of the birthing places of our red line, what we call illiquidity pivots, understanding the market actually shut down for a split second yesterday. And it's very rare that you'll actually see it on a time chart, which is great. It happened when that thing was triggered right at the moment of the minute switch. So you actually caught it on a time chart, which is very rare. Rare that you'll see that actually show up with a gap on a time chart. It's cool. So So I can't time chart a candle chart with time on the axis. Rare you see this on a. Okay, we're opening. Candle. Okay. Let's go. So the market's opening right at the sign of rational for Nasdaq and ES. So things are moving back into the boundaries. Let's go. Let's get Rocket Scooter back front and center. It's ready to go. Okay, let's get ready to go. We're a bear long up. Let's immediately start talking about it. Okay, so let's pull a liquidity map front and center. The first thing you do is you're going to pull on your liquidity map. Oops. What it's going to do is going to show me where the positional risk is. So right now in a bear long up, this way I look at it immediately. Hedge pressure support, back to open. We actually open below and are breaking through. This is a hedge pressure break, which is a great sign. There's an illiquidity pocket right here and a liquidity pocket right here. That's a great R&R for a setup. We are definitely rational. That is right decent out the door, 393 stop. This is textbook. All things are rational good when DD comes in, which is pretty soon. We'll see if that number is good, and let's check the so I'm just following what this is telling me right here. Okay, let's do a couple more. I'm liking what I see, so let's get a little picture of that. So recovering from bank earnings, I wouldn't be too since we did open irrational and we're pushing through it again, market could be wonky, so I'm not going to exactly be way too aggressive here, but a small position, right? So I'm starting my trading challenge on Tuesday of next week. Personal challenge, I'll tell you guys the terms of that. I did this with myself last time I streamed on YouTube, and I'll actually show you guys the stats of that. Hold on one second. Resilience. Okay, your resilience on the screen here. Take a look with res being above 0. Let's just look really quick. Below 0. Let me go ahead and start over. That is not the trade plan. It's going to be resilience less than 0. So it's actually to there. Thanks for reminding me. Somebody type that to me really quick. In the Discord. Okay. So with resilience less than 0, then that is resistance, okay? We all understand? So that's basically it. So it's about a 1.3 to 1 trade. If there's a 1 point stop here, be very careful. We did open irrational. So the highest today with resilience less than 0 is half gap. So again, it's not a breakout. Let me start over with this one. The only predictable portion is from here to here. So what I would do is I would trade to here. I would trim half. I would watch. If res is greater than 0 here, then it's liquidity pocket with 1/2 of the position. 1 point stop, 393. 1/2 or more. Do you guys like my trade plan? Go ahead and coach me on it. Do you guys like what it... Does that look like a good plan? It's pretty textbook, right? How do y'all like it? Coach me on my trade plan, folks. We post in Discord. I'm trying to get used to the new format here. And when I do my live trading challenge for myself, what I will do is I will post all my entries, post all my exits, post all my plans before I make them. And it'll be fully transparent, day in, day out, no camera tricks. Bear short up on Q is a little different, right? So let's take a look at what that looks like. Again, balancing the risk. DD is still great and good and positive or above monthly hedge pressure. So we got those two little kind of longer term bullish notions, right? So just to give a more general approach to what this does on the swing sense, there is 120 support, like long-term support, right? For monthly hedge. This is a normal thing we teach. Long-term structure, bullish. So the general DD, also will bias today from DD. Super easy to see that. And then the BRSU has limitations where there's a resistance there. So that's really easy to see as well. So NASDAQ is going to have a fight today. I'm going to draw a red arrow where that is. The BRSU that I look at has resistance from here to here. Bull zone and bear zone is illiquidity pocket. We always like to mark those. So it's going to move very rapidly through here. So this is a very strong potential today. Caution. Now today, if there is a break on the long side, I would enjoy having a break right here to go up. However, with resilience less than 0, we have a resistance here as well, right? So this is the peak of NASDAQ. Things are going to sell off today. I'm making my decision now. It's not, it might have 1 to 2 bumps up, but we're done for the day. That's basically it for NASDAQ. So with NASDAQ and S&P, I don't think we're going to get a rally. It's very hard to do either way. You have a liquidity pocket here anyways. Okay, so that's what I see. He's pushing up, this pushing down. It's going to be one of those things. If resilience goes greater than 0, oops, I'll put this in the right spot here. Yeah, we can look at the Russell as well. Considering the Russell for a trade, absolutely. I usually don't use it in my morning analysis because the Russell will mirror the S&P direction. The Russell pivoting I've not seen evidence that it pulls the whole S&P down. The S&P pulls the Russell down. So I usually incorporate, if the S&P is moving, the Russell will, but the Russell will also have pivots. I've seen it ignore its pivots when the S&P is screaming and pushing, but all three of them you must analyze together. I just don't, to save time. If I need a tiebreaker, I'll turn to Russell. Res greater than 0, then we'll have a liquidity pocket end of day, right? LP random from here. So LP ends the day, right? Of day. I need to get my tablet finished. So there's a small risk if I'm trying to break through all of these things. I wouldn't take anything big, and of course that BRSU has that downward pressure today. So res is less than 0, so we're gonna have probably a move like this, right? So pushing up, pushing down, it's gonna have a really interesting time because this is in an IP. So illiquidity pockets are gonna be volatile and choppy. So that's here in the middle. That's easy. So not only is it gonna hit resistance here, but it's going to be choppy, very choppy here. So do you guys see how I can just basically pan out the whole day? So while there is short bias, there is long support there. And we are also irrational right down below the band. So even so, there are no trades irrational. So one of the things I've been doing, let's just kind of pick an overall direction here. Expected, right? So it's going to be hard to pick where it ends up because it's going to be choppy in the middle, but we are essentially sandwiched in here, stuck. Sticky range, right? Okay, let's look at, here's the range today. Range. So there's the range day, and it's choppy. So when I told on the tweet that I made, I said I'm going to predict it's going to be ranged and choppy for the day. I mean, right out the door, there it is. So if you guys are liking how the analysis is done, we can teach you that. We'll train you today on all the stuff we do to kind of make trade plans. Right? Let me make it cleaner. Here. So it's pushing this way, pushing this way. So the idea is that I would say, you know, you can't really get stuck in the middle because it does not like the middle. So it's going to be a very weird possible breakout. So one of the cautions from here is that the illiquidity pocket is actually forcefully bullish from here. So it can very easily break very quickly. With these resiliences less than 0, it's going to have a hard time trusting anything. So if there is a breakout, we're pushing to there, and that's all I can really see. It's a limitation. Now, if I'm going to be a bull on any single thing in this market, I need to take a bull zone break. So the only time I'm bullish is when we break the bull zone. When we're in a choppy range, this is my confirmation of bull. So I'm going to put confirmation, breakout. So this is on SPY, and if you guys want me to do any other tickers, throw up some tickers and I'll put some in the scanner. We'll look for plays in the scanner. And I'll do anything you guys want to do. I'll show you how we use the scanner to look for stocks and plays, IWM. Yeah. So I'm just going to send this over to some folks of mine who were training. And show them how I analyze the day. I know my handwriting kind of sucks. Okay. Okay, the monthly maps, ETA on that. So monthly maps is a new function that'll plot out options trades for swing traders for a month. So if you're looking for picking expirations, picking strikes, how far out in the future, monthly maps are awesome. They are something that has gained a lot of attention very rapidly from a lot of options traders who have always said the same thing. How do we know which options to buy? How far out and which expiration do I buy? And that's one of the things that we made a tool for, and it's actually one of the most powerful tools that we'll have, and we will be using it daily. I'm talking daily, even in day trading. We will have a monthly map on the screen. We already did SPY a second ago, but I'll do it very quickly again. SPY is a bear short up. It has, at best, we're opening below hedge pressure. There's a huge chance we stay below. It's coming down today. If anything that SPY is doing, at best, it goes to here. At best, that I see. As is less than 0. So it's back down to here. Actually do the wrong thing. Hold on. So I'm gonna read it. Res less than 0 cases here. My handwriting so bad. Okay. Res less than 0. Back down to here. And we open below, we should trade below. So the res less than 0 case is falling. The bull case, again, and it's really strong. So res is less than 0 for sure. Right out the door. So the res greater than 0 case breaks to here and hits a pocket and ends. So the algorithm is showing me that SPY is going to have a hard time moving up. The stock's selling off, and it will take resilience to break 0, which is a lot of stocks need to rally for this to move. I don't see it happening. So the BRSU has that particular setup. We talked about that today. On the liquidity map, I matched the letters here to the letters here, and it tells me that hedge pressure is going to be a very strong resistance today, but a breakout, which is what we draw, these little 3 slashes mean a breakout, which will only be confirmed today by the bull bias we have, and of course, so I'm calling a downward day today, but choppy and downward. So it's not going to be like a crash day. I don't know if it will be. The Nasdaq is really selling hard, which I don't like to see because we had bank earnings today with the S&P sitting still, and the Nasdaq is selling on top of it, which has nothing to do with bank earnings. So this is another one of those all stocks will likely be selling day, and really strong negative resilience is pointing at that. Sandy Hack, make sure you add the liquidity map to your chart. Make sure you add the resilience indicator to your chart. If it's not showing anything, log out, log back in, or go to the settings and then do load defaults. And usually that'll clear anything that you might have stuck on your chart. So my general call today for the S&P is down. So if I were to put a gun to my head and say, where's it going? Is that the overall motion is down today. My call. Today, guess, right? So I only short against monthly hedge pressure. Today, estimate it, right? And where does it go to? We go right to functions, and we'll do monthly mode, and we'll see where the supports are at the 390s range. It looks like we have bull support all the way down to 375. So there's nothing in the way. So if we look at the two of these things, there's a really small scalp from here to here. Let's see what this. It's my drawing tool. So this is estimated today, end of day estimate. It might go up before it comes down. It should be from here to here. Let me just like the res case here. So resilience negative. Might get some upside because there is still bull positioning. It still move here. And so what I do is I don't take the short because there's conflicting signals. We have long bias, long hedging, but short pressure. And we also open below monthly hedge. But remember, if you break hedge pressure, it's irrational to the top side and irrational to the downside. You have a very little rational window today. And that's what we talked about yesterday. Rational windows tell me where to trade and where not to trade. So right now, we are now in a very small, limited space to play. And I guess I'll show you. I wish I can, let me turn liquidity map off. So if you guys remember that we have 393 as one of the things to look at. Let me just clear off the chart here. Oops, let me put it back on for picture. Right here. So resilience greater than 0 case, there's a potential range breakout to about, let me actually draw it to the right spot right here. LP. So the R&R is pretty decent for a hedge pressure break to there. Requires hedge pressure break as well. So we got that. So this will be, if there's a squeeze, it could go up to there. That's limited on the bull case. At the end of the day, as long as res still stays nasty, I'm expecting the market to be down here. So my expectation are the market's going to be choppy, irrational. It's going to fall and hit some bull bias. So we're likely to spend the day down in here more often than we are to rally. The stocks are giving me no support today. Everybody in chat, do y'all see what I wrote? Is this making sense to everybody? I'm piecing together our 3 major indicators. This is a bull bias. Stocks are not gapping and going. Stocks are resisting their half gap. So S&P is likely to resist its half gap. And the liquidity map says that we're expecting to see resistance against hedge. Breaking through hedge is another irrational sign. So the market today is proving itself to be choppy. The S&P has a wide range that's going to experience. So with the VIX decay, that's even more confusing. So everything's all over the place. And when everything's all over the place, confidence is low, positions are small. So even if you do chase a long or chase a short, small position today. That's all you have to do. Awesome. You guys smash that like button really quick. Everybody scroll down really quick. Smash that like button. We're going to show you guys something. Help that algorithm go. It's your first time here. If it's your first day here, say, hey, it's my first day here. How can I get rocket scooters? A 7-day free trial. If you click this link right now, as a matter of fact, we have more free trials today than we've ever had before. We got so many folks that are here for the free trial. It's awesome. So we're revamping the program so that we can actually have free trials learn very rapidly. So whatever style of trading you do, we'll have something for you. Let me actually post this here. Oops. I need to not do that. Some of these. So the 3 major indicators that are important to rocket scooter, like out the door: resilience, DD, and liquidity map. So they're going to tell me today that the conflicting signals tell me it's going to be hard to guess. Irrational breaks tell me it's going to be hard to guess. We have a general bearishness in the stocks, a general bullishness in the positions. So stocks are selling off immediately at the open, but the positional bias is bullish. So you're going to get, DD is a very strong indicator that indicates upward pressure. This is stronger than this on the index. So the index has its own tradability. The stocks are all very powerful today. So the stocks pull the index more often than not, but we need resilience to go greater than 0 for me to have that confidence of a break. Now, this is normally a leading indicator, except when you have irrational moves that defaults this to not leading the index. So when the markets are rational, which we have 5 flags that do that, and I'll tell you guys what it is. The indicators will be coming on the chart that say that pretty soon. It'll say irrational, little light bulbs here, that resilience actually leads the market. So today I would tell myself, okay, resilience is negative. It's going to resist, but it's not leading the market today because these irrational breaks pull everything on par. Irrational markets tend to nuke the arbitrage that you can have by seeing the stocks move first. Everybody's either dumping all the things or longing all the things algorithmically. So right now with SPY breaking hedge pressure, all the things are being longed on these calls going in the money simultaneously. It's all algorithmic. So you're not going to see like a hedge fund buy Apple and then, oh, people see Apple's moving up, so let's buy the SPY to go with it to go up. You don't see that lead off with resilience when irrational moves happen. TLT, yeah, let's go for it. Okay, so that is my spot for the day. Is it's going to be choppy and it's limited range to the upside. If there's an upside scalp, here we go. So choppy, limited upside range, DD greater than half. So possible, but conflicting res. So unsure, small positions. Also note open below, right? Likely to close below HP, but in HP break now. So irrational flag already. Sit out day or very small, sit out day or even double small position, right? So let's go into one more thing really quick, and we're gonna call it we call it the window of opportunity, right? So it's one of the things that was really neat that we did today, and I'll show you guys at the end of the day. But let's do some of the tickers you guys are talking about. So you did SPY, IWM. Let's go really quick. How are you guys liking your first week of the platform? We just got launched, which is cool, not too long ago. So in our platform, what we do have is we have a scanner. So let's pull some breakouts on the scanner. Let me show you guys a cool little thing. So the scanner, let's pop out version of the scanner. So Rocket Scooter suite of tools is a bunch of things. We have charting, we have a scanner, we have a module that shows you where market maker positions are. We call it walls. We have a module called Liquidity Map that actually displays on the charts. The module is actually here. Liquidity Map is a very strong, powerful tool that changes what you see on the chart. I'm going to pop out a few instances of the scanner really quick, and I'm going to pop these on my screen here. So I'm going to make another screen. I'm going to show you guys how to set up your scanner real quick while I'm doing a couple more tickers for y'all. Yeah, type in some tickers you want, and we'll do some trade plans. And what I do is I like to use Rocket Scooter to plan my risk management and plan my risk and reward every single day. Yesterday was a really good case for study, so we can definitely talk about yesterday if you guys want to at the end of the day in the Zoom session. So what we do here is we'll do an hour-long stream. I'll do my live trading challenge, which what I'm going to do is I'm going to challenge myself to go as slow as I can or as slow as necessary and properly leverage on the whole way up. I'm going to take a 10K account and trade it to 100K. I've done a challenge before, similar, on YouTube, live streamed, fully transparent, account number on the screen, account balance on the screen, no camera tricks where I disappear, no camera tricks where I cut the stream off when I'm losing, nothing like that. It's going to be just straight up me trading, and win or lose, you can follow the journey. It's fully transparent. I do it just to show day trading techniques. When I did it the first time on YouTube, I actually went on right out the door, a 70-day winning streak. I said, I'm starting a challenge today. Started the challenge, and then for 70 days trading S&P and NASDAQ futures, it just rallied. The account 70 days, no losing days. If you were here for this, so those of you like, I'm here for the first time, who here saw the 70 day winning streak? Say, I was there for it. Was there any camera tricks? Was there any tomfoolery? Was it fully transparent? Tell the new folks here, yeah, he actually did it. And today in the Zoom call, if you guys want, I'll feel free to show you all the details that go with it. So 70 straight, that's 3.5 months without a single red day. Now it's not camera trickery. When guru dudes, and I'm not a trading guru, I'm just a normal guy, normal trader guy. When trader gurus say that stuff, I always get iffy and I have to ask a ton of questions. Where's the broker statement? You know, where's the continuous history? Where can I see all the trades? And there's always some kind of excuse, right? Oh, well, you know, there's nothing. Everything was on the screen every day, 9:30 to, I had COVID and still woke up and streamed. Not even COVID got me off the stream, right? So just to say, I do that just because that's what's required in this industry. Everybody has what I call camera tricks. Like they'll stream in the morning and then the video gets released at 3 p.m. Yeah, that's a camera trick. You know, things like that. There's never any of that stuff here, right? It's like I'll show up live, win or lose. If I'm losing, you can watch me have sweat on my forehead. There's no, let me cut the stream out when I'm losing. There's no camera tricks at all. It's just done for a personal challenge and personal reliability to you guys. You know, it's a commitment. It's not a loose commitment. It's a strong one, which is the commitment we have to teaching you trading as well. If we are doing it, again, anybody can say anything they want, but you can't argue with results. So that's the whole thing is if I make it, if I don't, either way, traders win some, traders lose some. I've had some massive gains in my day. I've had some massive losses in my day. Traders always win and lose. There's a whole point of trading. So you're going to see the wins. You're going to see the losses. There were a couple of times that got pretty bad during the challenge. We still managed to recover and continue to go. So again, that win streak is luck. You can't go on win streaks like that. It's just luck. And it was just like, I don't know if I just hit a stride, but every single day was like, lucky, I guess. But I mean, I was trading systematically too, of course, using liquidity maps and things we have. But now we have a whole huge slew of tools, even further so to add to it. The losing days were when I broke my own rules, usually, yeah. And that comes down to, you know, even being a human as a trader, psychologically, you have your own weaknesses, and so you get tired, you get overwhelmed, you just tend to get loose or slacking on your stuff. So those of you, anybody that's a naysayer or anybody that has anything to say, there's two different types of traders in the world. There are traders who just do their own thing and don't care, and there are traders that really care what other people think about them. Here, all we care about is just showing you results, right? So you will see if there's good results, bad results, you'll see. So give it a chance, stick in the stream, come every day. Give it a fair shot, right? So this is a challenge between me and myself. This is not a challenge between me and anybody else. This is a challenge between Matt and his account. We're going to move our way there. We're going to have 3 rules for the challenge. So IWM is a nice, strong bull long up signal. So IWM is support from here with that resilience being challenged. There's that move from IWM. So remember, IWM has a little bit of upside as well from the BLU, just like NASDAQ does. But as far as the case that we're in, it's hard to say because while we do have the bull bias and resilience is still not getting a lot of strength for the S&P, it's likely to still maintain choppiness. So you be very careful today. But yeah, IWM is good. When you get those mixed signals, all I do is if I do take the long, which this is the setup for the long, it's very illiquid up here. There is no evidence of IWM hitting resistance if you're just trading that alone. Again, with NASDAQ and others having resistance, I'm going to say that the IWM is pulled just like the NASDAQ is pulled by the S&P and the resistance that it does have. So I'd be very careful personally trading any of these. And there is on the monthly scale on IWM, no monthly resistance. With resilience less than 0, I always take this white dashed line as resistance. So it's one of those things that you either take a small position and cross your fingers, or you just let it hit it and not deal. I personally wouldn't be trading the indices today. So let's talk about stocks in the scanner. Let me go all the way to the left side of my screen. Here's how the scanner works. Okay, ready? If you guys like liquidity maps, like let me revisit. Oh wait, I wasn't even showing my camera here today, and I'm having a great hair day. I feel like got a nice little like curl here from sleeping, but it does look kind of like relaxed, like I don't even care. Like what's his name? Jason Sudeikis' hair just has that kind of like, I'm cool and good looking, I don't care. My hair is just always awesome looking. I must have accidentally slept in that mode. Okay, so jokes aside, liquidity map right here. University of Michigan sentiment 64 on a 60. Oh, cool. I don't see any volume coming from that, though. That's abnormal, but there was a little bit of a move in the S&P. Not too much though. Okay, so what liquidity maps do are showing me where bulls and bears are positioned. That's it. What our algorithm does takes options order data, and we know what behaviors market makers have to follow. We do. I mean, it's very well documented in certain places if you know where to look. And so we look for market maker orders where there's an illiquid spot in the market. It's simple relationship. Bull zone means there's an illiquid spot in the market, which means somebody has longed without a bear. A bear is a person who's short. So you long the market makers are forced to short to you, and they'll buy calls to hedge. That's all that it is. So if we isolate just the market maker options, the algorithm sorts through every option that exists, and it's a massive data feed, and only finds what it believes belong to market makers, an option that is hedging an illiquid bet against the market, right? Bulls with no bears, bears with no bulls. Then these are market maker calls, market maker puts. So these are real bears, bulls, real bears. That's it. That's the first letter. The seller of those options, I did a whole entire infographic series on the relationship between these three letters. These are traders against market makers for the shares. Hedge pressure are the option sellers forced to long and short for the exposure of an option that's in the money. And again, this is a long-winded answer. If you don't understand options, this might be Greek to you. But at the end of the day, hedge pressure is a force that has net repulsion from it. When you get to it, it pushes one way or the other very rapidly. Bull zone is just bullish bulls. Bear zone is bearish bears. So when you add all these pressures together, you're going to get algorithmic hedging here or here, depending on what happens when the human volume goes away. So an example is if you're trading and you hit a hedge pressure, volume will spike every time. Each of our three indicators on the screen will predict volume. That's the one thing that you have that nobody else has. From the start of the day, this is what puts our analysis. Our platform is a different style of analysis, right? So while we do have traditional technical analysis built into it and you know, traditional indicators built into it, that's for you guys to blend your style with learning another style. So imagine you had a technical platform that had like fundamental integration. It would implant on the chart. You know, Apple had great earnings. Here's some forecasts for Apple. Well, this is Apple positional risk analysis. So while you can do your traditional SPY or whatever you're doing, your traditional analysis, this is showing you where positional data is. These are real bulls, real bears. This is hedging. And then monthly hedge pressure, which is off the screen, is another type of hedging for monthly options. Same thing, but just with monthlies. So when you look at it together, you're getting not only whatever tools you do, but you're getting positional data to go with it. Anytime you touch any one of the three levels that you see that we present, white, yellow, and blue, they all stand for different things. Each one of these is a guaranteed volume spike. So before the day happens, you ever see people that trade with like a volume profile, right? The problem with volume profile is predicting it's using yesterday's volume to predict tomorrow's move. That's the flaw of technical analysis. So imagine that like today, everybody was trading right here and you have like a volume profile and a point of control and all that stuff. And then you open up today and you're looking at a volume profile from yesterday, right? Oh, there's a ton of volume here. Certainly we're going to get there and it's going to be a resistance. Maybe, maybe not. How do you know? You don't. What if every trader at the end of the day dumped their position? You had all these bulls, tons of bulls, buyers, and like, we're no longer buyers anymore. Boom. But you still have this huge volume spike here on your volume profile, right? So you're looking at today, you say there's a lot of volume here. There's a spike. I think this looks like, I'm just going to guess, maybe the point of control. This is your traditional technical analysis. But if there were people longing and they all dumped their position at the end of the day, you get here, there's not going to be any resistance. There's nobody trading, right? This is a very silly thing to guess. Just looking where volume was can't predict where traders will be. So to overcome that deficit, How do you know if the traders are still here? Are the bulls and bears still here at the end of the day? That's what we solved. So if there's a high volume node from yesterday, an example, what does it look like? Well, you still have bulls here. Look at that. You do have bulls there. They're still long the market at the end of the day because they're still long in an area where there was no bears. And they're long in an offset where there was more bulls than bears, and market makers are still hedging that area. So anytime you have a volume profile matching a bull or bear zone, it tells you at those high volume nodes who won the fight. And there's your example. So at 9:30 today, when we do these calculations, you know the outcome of this fight. This on a volume profile just shows you volume. It doesn't tell you anything else, who won, who lost. You don't know. The market went flat, right? But we know who won the fight because the bulls, once everybody laid their swords down, the bulls are still standing there. The bears are still standing there. There are a couple of bulls there and mostly bears there. Does everybody see that? So right now you're predicting tomorrow's volume profile today, because anytime you interact with some of these areas that we show you, these will be areas of high volume. So hedge pressure is always an area of high volume. Half gap is always an area of high volume. There's your proof. So tomorrow there will be volume nodes there and volume nodes there. Maybe not the highest ones, but anytime you interact with these levels, they will predict where volume will be. Predict every single time. Every single time. So the one thing we have that you can't refute, you cannot refute this. We have an algorithm that will predict where volume will be in any stock, any ETF, any index at every single time. I'll give you 3 levels that are guaranteed to be high volume nodes tomorrow when you're using tomorrow's volume profile trading. So today's volume profile, right, off of yesterday's trading, as you're just watching it build live, maybe you're watching it form live, I would have told you yesterday where those nodes would be before they happen. So you're getting 1 day ahead of a volume profile. You have a blank profile that you can predict it will be volume there tomorrow. So you're a day ahead of a volume profile. So most of our tools are to get ahead of traditional technical analysis. You're going to know there's volume because every single time you interact with this level, it's a constant rule. So you can, like I always play this game, I tell people to give me 10 stocks and I'll show you that that's a thing. We're a team of engineers with engineering degrees, right, that used to work in different places. I worked in oil and gas. And so data analysis and quantitative analysis is very important to me. So here we go. This is high volume, this is high volume, this is high volume. Anytime you interact with these levels, look, higher volume. Interact with this level, higher volume. So when I'm trading, I only care about this level, and this level. Now my guess is just what it does between them. How does it interact? And that's what liquidity map shows me, the push and pull of the hedging or the positions. Bear zone is clearly resistance, right? Long hedging is clearly long hedging. So you have long hedging against bear resistance. And you can see that because of that design, it is meeting in the middle. And it's sitting there right now. And it's as simple as that. So the liquidity map shows you the relationship between the hedging and the bull and bear positions. Is very simple to do. The letter bear long up is telling me that I'm expecting right now hedge pressure to be support on this break, and it's moving to the next resistance. Where's that next resistance? Well, it's like right around here. Okay, a couple more. TLT, yeah, let's go for it. I invite you guys to try out the platform. Again, don't be sold. Don't let salesmen sell you ideas right out there about anything. Check it out for yourself. We have a very substantial thing, and it's making a lot of people shaking their booties because we're growing so fast, getting a lot of exposure. We're on a lot of podcasts, we're on a lot of shows. There's a lot of things going on with this group right now. It's getting us a lot of press, right? So this is the time when the haters start to step in, which is cool. You know, to each their own. I stay in my own lane. I have nothing bad to say about anybody, but I stay in my own lane, and we make a really cool tool. You guys can add this to anything you do. So if you buy any of that stuff out there that anyone else has ever made, more power to you. This is your risk management to go with it if you want to take something different. We're about to have a very, very, very interesting launch of something new that we've made. Like I guess I'll say a new price point, a new thing. It should come out next week. Huge announcement, but we'll have a portion of Rocket Scooter's tools available to you for a much lower price than what we already have as well. Call it a light version if you may. For those of you that just want to get started, you want just the risk management portion of things, we got you. Okay, TLT today, it's a bull long up with look for resistances. So the first thing I do is I will go to a daily chart. First of all, bull long up is an upward pressure, right? So TLT is looking pretty okay. Now what's going on with this is a, I think is TLT an ETN or ETF? It's for the 20-year treasury note, correct? TLT. So fundamentally, right? When you deal with inflation, let's just teach you fundamentals going with TLT while I'm talking about it. When you deal with inflation, treasuries give fixed return yields, right? So you get a yield on treasury. When you have that note and it matures, you get paid a fixed return. And inflation means that the value of your dollar goes down against what you can buy. The purchasing power goes down. So imagine that, like, if a loaf of bread was $1 and it now costs, and you made $1 an hour, you can buy a loaf of bread. But if a loaf of bread is $1.05 next year and you still made $1 an hour, then your hour of labor doesn't buy bread anymore. So that's what inflation is. So with the purchasing power going down, in a period of inflation, nobody wants to hold fixed income assets, right? Why is the treasury note completely tanking or why are notes tanking, which means yields are going up? Why is that happening in this era, right? Well, post-COVID, every smart trader in the world understands that when you shut down the entire world, everybody loses their job and they're not going to come back because of the pandemic very easily. So with the lack of available workers, that created the inflation we have now. One guy wants to go back to work and there's 1 billion jobs available, then they can demand high wages, creates inflation. Wall Street knew that since COVID started. So Wall Street dumped, they knew inflation was coming. Smart quant firms out there understand that the mechanism of shutting all the businesses down is that inflation's coming. You just know it's going to happen. So they just dumped all their fixed income. Like, nobody wanted to hold this stuff, right? And that's what you're just seeing. So fundamentally, you have to understand that you can't treat treasury bonds just like you can't treat like oil or natural gas like stocks. I hate when traders try to do that. It's completely incorrect. Commodities and treasuries are a different boat. You cannot use technical analysis to trade these things ever. So you have to be very careful to understand the environment you're in, because firms are not day trading these things left and right. Market makers may be doing so to satisfy the liquidity needs, but people fundamentally buy these things because they're betting against inflation. Now, at some point, as inflation's coming down, the year over year is coming down, and the month over month was actually negative. So this is the first time, I think, since COVID, we've had a month over month CPI change that was negative, which means we went down just a little bit. The year over year was coming down, but that's inflated artificially because last year inflation was high. And this year, it's just, this month over month is just slightly lower, but the change was big. So the year over year looks like a drastic change. That's just a mode of the math. In reality, inflation slightly came down just a little bit. And that's enough, right? And Wall Street's starting to have an appetite again. At some point, when treasury bond, when your notes go down in premium, the value, yield goes up to attract people to them. So if something has less worth, it's riskier, the yields go up when the bond's value comes down. So when fewer people want the bond, the overall fixed return is divided up by the demand. So that relationship as a bond goes down, yields go up. So yields go up to offset inflation. If inflation's bringing the overall, spending power of your dollar is changing, your bond is losing that future yield over time, right? So if you're going to lose 2% a year for a fixed income, your return is actually going to lose 2% a year, even though you're getting the same dollar amount later. The dollar is inflated, so it has that value lost. So the yield has to be enough to offset the loss of inflation. And so there's a certain point when Wall Street's appetite is, okay, the yields are high enough, so value's down, yields up, right? That's what happened with the bonds. So at some point, the yield is up just enough to offset, this is the zero line, to offset that lost due to inflation, and now the bonds have a bullish appetite. It's the relationship in fixed income is, my buddy Keith trained me on how this all worked a long time ago. It's a very neat world to learn about, but it's not going to trade technically. It's going to trade until Wall Street decides that the yield is overcoming inflation. Do we all understand that relationship? Are we good? Any questions there? Let's just give a rudimentary analysis without talking about time and maturity. If you lose 2% a year, and it's 2% a year every year, and that you have a 1-year treasury note that gives you 2% at the end of the year, okay? So say that you put in $1 and they say we're gonna give you $1. So here's the upper target. We look for gap fills. Actually, there's another one. So first and foremost, it's long, long-ish, and the first gap fill has a target right there. That's the whole reason I'm talking about it. So there is a bullish target there to hit resistance. And then if there's a breakthrough here, there's a couple of really nice spots where you're gonna start seeing moves there and there. So first and foremost, I always plot where my gaps are. So look for unfilled gaps on a daily chart. Very easy to see these. This one is right there. This one is right there. I don't see any more. And this one is right here. A little more detailed on that. So, bullish. Why does this keep going to the bigger one? Bullish there. In general. And there's a hedge pressure today that gives like a long off of that I'm looking at. Okay, cool. I noticed my numbers start dropping. We talk about fixed income. A lot of people like this stuff. It's a hard thing to get into, but it's definitely good. Sometimes people believe there's a relationship between fixed income and stocks, like stocks come up, bonds come down. Again, it has to do with the firm deciding how much of their capital they're putting into fixed income and how much you're putting into stocks. I'm going to tell you, in a period of inflation, fixed income is a toxic asset. It's losing, your yield is losing money per day. So an example, I'll give you an easy relationship, super quick. Say that you buy a bond for $100, right? And they say, I'm going to give you 1% yield. And don't think treasuries, just think simple interest. I'm going to give you 1% yield in 1 year. So in 1 year, I'm giving you $101 back. I'm giving you $1 for your thing. I'll buy back from you, give me $1. So you're gonna make 1% on that. You make $1 on your investment. As long as premium stays the same, value stays the same, everything stays the same. You put in 100, you get 101 back. How about that? Okay. However, if inflation is also that much, inflation is 1%, then your $100 premium loses essentially 1%. So you're left with a $99 thing technically that you bought versus the 100 plus 1% of $1 that you do make also. So you're again 99. So it's roughly $100 at the end of the day. But wait, I gave you $101, but it's really $99.99 of spending power that you gained. So in all honesty, 1% a year, remember that we're adding percents and subtracting percents. That's why it's not, if you add 1%, subtract 1%, it's not 0. It's 1% of 100 is 99, and losing 1% of 1% is a penny. So your $100 actually lost money. Only just a penny. It's a little tiny bit. But essentially it's wash, right? If you round it, it's wash-ish. But wait, I gained a fixed income. Why didn't I not make anything? Well, because inflation took away your gains. So with the high inflation, right, let's just say that you're losing 5%. And I'm just using simple math, and don't try to correct any errors in the math. This for understanding. So imagine if your inflation loses 5% a year. This will never make money. You will lose 5% a year. You'll be around the range of 95 after year one. And 5% of that is what? 2 3/4. So we're going to be down to like 92, et cetera, et cetera, et cetera. So even though you're gaining 1% a year, you're actually losing value, like hemorrhaging money, right? Because inflation this is spending power, not how many dollars you have in your pocket. You'll have $101 in your pocket for sure. You get paid the dollar you say they get paid, they're going to pay you, but that dollar buys less and less stuff. So in reality, you have 92 of those dollars in your effective in your pocket. So your $100 only has $92 worth of value, spending power. So if you can buy a loaf of bread for $1, you can only buy 92 loaves of bread instead of 100 at the end of that year. because the price of bread went up. So it's like you have the same amount of money, $101 in your pocket, but the price of things went up. So effectively, when you think of it like that, you're making less money. So the whole point with bonds is that they're going to be, nobody wants them until the yields go up enough, which means when the demand for the bond goes down, premiums go down, yields go up. The yields have to go up enough to offset that loss to inflation. So if you're losing, like, if inflation's 1% a year, but the yields go to 2% and 3% and 4%, the higher the yields, the higher the appetite of the bond. So once the yields start going up, Wall Street will be like, ooh, let's start getting in on that. This is a safe play that will start beating inflation. And then again, yields come down. Once value goes up, yields come down a little bit. So then it crosses back below inflation. And then people don't want it. And inflation comes down a little more and people want it more, which brings yields down. They sell it. So bonds have this way of like needing to crawl their way back as inflation's coming down. You see that all the time. And they don't really rally very quickly. When they bottom out, they always do what I just showed. So that's the mechanic of bonds, right? You don't usually see treasury notes just V up and rally. There's not a strong demand for them. They're always a balancing act due to inflation. So an example, if inflation was, why does it keep doing the big fat line? Again, I love talking about this. This is really interesting to note because you always want to kind of have like a side look on what the notes are doing, because you can see Wall Street has an appetite to be in something. So an example, like you have cash in your pocket, that's one trade. You can have fixed income and you can have stocks, right? There's a bunch of things people buy. People tend to blend their trades in both of those. Or after COVID, people tend to just go to cash. If the yield on a treasury note is outpaced by inflation, you're throwing your money away even buying it. That's the whole point. In high inflation, nobody wants to hold these notes because you're basically saying, oh yeah, I'll loan the government money and then it's going to cost me money to do that. No thanks. So when you see people coming back into something, then it shows that Wall Street has an appetite for risk that's not cash. So I like to look at the notes bottoming out to tell me at least people are willing to buy something. And this is strictly a thing on inflation. Remember, around November last year is when CPI year-over-year numbers peaked. So that's a neat thing to know about. And in general, you don't really get really strong V shapes a lot of times in inflationary periods with this. So imagine that like inflation was 1%. I'm just making up a number. And that easy relationship. And all of a sudden, the yields here are 0.2, and then values go down, so yields are 0.4, 0.10. These are not real numbers, by the way. It's just numbers I'm making up for the example. And all of a sudden, right here, yields jump to 2%. Oh, hell yeah. It's beating inflation by a lot, so let me buy it. Ugh. Okay, damn, we're back down to 0.9. Well, nobody wants them, falls down. Ooh, now it's 1.5%. So when value goes down, yields go up. So then again, people buy them, and then yields go down again. Okay, now nobody wants them. But then inflation came down, right? CPI is showing another thing. Maybe inflation is 2%, 0.2%. I'm just making up numbers, 0.2. Okay, that's definitely appetizing. Let me buy it. Okay, now we're back into the 0.2. Nobody wants it, right? Ooh, inflation comes down again, 0.1. Okay, that's definitely more. I want it. So bonds have this weird way of just doing this, fighting that inflation change, and that's what you'll see. So a tortuous path up, but it's pretty much there. There's that example of that. I've been trading for a very long time, you guys. If you ever want to learn these things, this is what will teach you. Anything about anything. It's never a really strong rally. It's always that kind of, it's very computational. It always has to crawl back. Is that a pretty cool lesson? So people that try to like use technical analysis to trade treasury notes don't know what they're doing. It always has to crawl back because of that relationship I just showed you. My buddy was a fixed income trader for a hedge fund in Austin, or annuities fund, one of those things. And they that's what he traded. They traded treasuries all day long. But it was like he's like when he stopped working for that firm, he started trading the S&P just for on his own. He's like, dude, he's like, you guys in equities, he's like, y'all have it so easy. He goes, fixed income, he's like, we don't use any like, he's like, we don't use any technical analysis or charts or any of that stuff. He's like, you know, we use all these complex equations that are trying to predict inflation. and making our decisions off of those. Like, oh, it's interesting. But he taught me that relationship, and it's that you're gonna have to be very careful trading this. I mean, it still has its own day-to-day moves. Let's go back to the liquidity map. But as far as like expecting these things to break out and rally over a long-term swing, it's a mechanic of inflation. So you really have to take these things week to week. And the mechanism of inflation now is the relationship of the jolts versus the unemployment situation. Jolts come down, unemployment goes up, wages come down. And so when wages come down, inflation comes down. And that's a major mechanism of inflation right now, is wages. And now we're going back to shortages again, which is another smaller thing. In COVID, shortages of goods created a lot of inflation. Then we went back to a surplus as we made a lot of stuff. Now we're starting to see shortages in the spot markets again, food and other places, so be careful. But yeah, so again, BLU has bullish hedging from there. This will show you the structure of Wall Street's appetite for these things. Wall Street is certain, so bull zone and bear zone actually have a lot more power, I would say, in the treasury market. There are calls here because people are long the TLT because people see the appetite for treasury bonds going up. Why? Because inflation's coming down. It's that simple. And the jolts are coming down, and the unemployment situation has been going up. So you can see that people are certainly seeing inflation further coming down. And so the appetite for those are going up. So in a general sense, I wouldn't just technically trade treasuries. I need to ask myself, what's the inflation situation? Now, either you can go through that complex fundamentals, or you can just buy Rocket Scooter and say, you're in the bull zone and treasuries, and Matt just talked, and save the stream, right? Matt just talked for 20 minutes about treasuries. But he's actually telling you this bull zone is a testament to inflation coming down. Wall Street is telling you they are long treasuries from here because the yield is outpacing inflation. This is one of the coolest things you'll ever learn. And what that actually means is that cash happy Wall Street that sold other assets, and Fed that sold other assets, right? This is what quantitative tightening is about, or Fed that's letting the things on their balance sheet mature and not buying back into them. While liquidity is down, Wall Street's becoming bullish. Yields are outpacing inflation. Pretty cool lesson. I'm not even a fixed income guy, but that I try to explain it the best that I can understand. Is that easy to understand? When you're in the bull zone and treasuries, in an inflationary environment, it means Wall Street's appetite for this thing is long, and you only long fixed income when things like stocks are very risky and you're certain that your fixed income is going to outpace inflation in an inflationary environment. So in an inflationary environment, nobody will touch this stuff if the yields are less than inflation. You'd rather just have your cash lose 2% a year than your yield lose 5%. You would just keep the cash. So when inflation is high and you're in the bull zone, this is Wall Street's testament that inflation is coming down enough that these guys have an appetite for that. Do you all understand? So while there is another nod to liquidity map, in general, bull long up says if you open and you support at the open, that's that 1A trade plan that I usually look at on BLUs right here. So if you open, which is the black dot, or if you open and you find volume and support at the open, then it tends to have some bullish pressure to it. Everybody understand? And fundamentally, it does make sense. The CPI numbers are coming down. You're going to see bullish momentum. Somebody just asked a really cool question in chat. They said, okay, so our algorithm will show you, just in general, forget about TLT for now. Our algorithm in general is showing me that we have bullish pressure here and bearish pressure here. But they said, like, what do you do up here if there is nothing? Like, what do you still consider it? So what our algorithm actually does is up here, while there is no, there are no bullish positions, right? This is so far out of the money, there wouldn't be, imagine there's nothing else there. I don't know if there's anything else in TLT, there's not. So imagine, like, what would you do if price is trading up here? What our algorithm actually assumes is that it's infinitely illiquid. It's indeterminable, but you know how we have liquidity pockets like this, where you have a bull zone and bear zone, that max squeeze point. And the other way around is you have a bull zone and a bear zone up here. It's different. We call those illiquidity pockets, where it rushes through them very quick. So in a mode of, like, what do you do above put wall or above call walls when there's nothing? We assume there's a bear wall at infinity. Therefore, above here, it's infinitely illiquid. So it's indeterminable, which what that word means in mathematics, indeterminable, since you can't solve for infinity in an equation. You have to you can't analytically determine that. You have to numerically determine that. Or sorry, you can't numerically determine it analytically. So the concept is just infinitely illiquid, which means not that it rallies forever. It just means liquidity is absolutely indeterminable. So essentially, we just treat it like the bull zone goes up forever. And you have no evidence that it does, but we assume there is no resistance. So it's indeterminable, so we don't make any inferences there, other than it's not bearish. So when you divide by a not bear or divide by a 0, it becomes infinite and then indeterminable. It's a math thing. Okay, so questions? All right, next one you'll say. Tell me some more tickers you guys want to do it. Yeah, Travis, what's the thing? Next week. We're still getting all the final tools that I need to do my challenge. We're still building some stuff, especially on my stream. So I'm gonna have multiple cameras set up and everything. And we told everybody 2 weeks ago that we'd start around the 1st of the year. So the plan is right after the holiday when I come back. I have family in town this week, so I didn't get started this week. So we're gonna start next week. I have family that have come into town to run the Houston's having a marathon. So all of Nicole's family members, there's a bunch of them running in it. So they're coming in and we're just hanging out with them basically every day. Yep. I think the marathon's on Saturday or Sunday of this week. I almost thought about training for it. I didn't have any time. Okay, throw me some more tickers. Let's do a couple more, you guys, while you're here. ARMK. I know I talked a lot about treasury, but definitely bullish in general, but you have to take treasuries with a grain of salt because there's going to be fundamentally, I think there might, I don't know if there's any options for this one. Let me see. ARM. Do we have any data for that? There's no options that we have. We'll not be able to pull a liquidity map for it. Refresh my platform real quick. Okay, we say ARM. Did I type it in wrong? ARMK. Oh, ARMK. Okay. I don't see anything coming up for that. Yeah, well, I don't think we have data for that. Nothing's coming up. Yeah, so we don't have anything. Let me see if on the classic app it shows any options data. Yeah. So it says no data found for symbol. That's why I was just wondering my platform's using. We just don't have any data. So another thing that you can do is if there is no data, sometimes if there's just monthly options, we see if there are monthly options. There are none. So we have no options data for that. If there is options, if it's the first time anybody's ever called it, we'll start pulling the data for it tomorrow. So there are internal algorithm on our platform actually looks at stocks we've pulled. So it's something that nobody's ever pulled before. And so tomorrow morning we'll retrieve the data for it. We build our list off of Journeyman. CVNA. Our data providers also, let me try something really quick. I'm gonna let my team know this. CVNA and AMK to be oh, and it should show up in the alert here. Look, it'll say no data received for walls. I forgot we have that up there as well. So when I do this and I run it, it should give that note. The alarm is showing up. So some of them just don't have any data, and that's just a result of that. So what do you have? CVNA. Is there options for it? So CVNA monthly, right? If there's no weekly options, it won't pull anything. So what you'll do here is you'll have to put it on monthly. So some of the smaller cap stocks only have monthly options, and daily mode produces nothing. Now this is a chance for you guys to vote. How would y'all like to display when you put in something that doesn't have monthly options? If I do CVNA, for instance, liquidity map by design will draw something, but it doesn't necessarily tell you there's no monthly options, right? So manual with one works. Oh, really? Okay. That's a bug that they should have fixed. Okay, let me put a note for that. I'll be right back because I'm going to take a quick little bio and breakfast break. So give me 2 seconds. I'll be right back. Don't go anywhere. Hang tight. All right, we're back. Let's take a look at what's going on in the markets today. All right. Hold on one second. Let me check. We'll do some scanner settings real quick. CVNA. There is no data. When you put manual 1 in there, what it's doing is pulling Friday's data. So it's actually what you're triggering in the database. Well, what it is, there's no data today. So we don't have data for it, right? So when you run it, it's when you put 1 in there for monthly, right? So monthly's pulling monthly options. If you put manual 1, you're triggering old data. So what this is doing, and actually we were investigating that. I was actually talking about it. You're actually triggering some old data pool in the database. You're actually not pulling fresh data. So that manual 1 trick is not pulling fresh data. It's pulling Friday's. Well, actually, no. This is pulling today's data. Hold on. Hold on. It does have an updated timestamp. Okay, let me look really quick. Yeah, we're gonna look into it. So currently right now, when you run manual, we route outside of our server to an outside server. Yeah, actually, that was my mistake. It is updated. So what we're gonna do is we need to verify that that's real data. There's no manual shouldn't trigger a data pull. What manual does is it sends your calculations somewhere else. So auto calcs are done locally in our database, and they're the same for everybody. When you manually start changing parameters, we have to do a special calculation for you. It routes differently, and it shouldn't be producing data unless auto has glitched to produce none. So we're about to check to see if auto is having data. Yeah, that's probably the, yeah, that's what he just messaged me needs to happen. Yeah, good deal. Yep. Okay. Okay, any questions you guys have? A couple more tickers. Yeah, market's just kind of doing what we were saying it was going to do, just kind of like choppy, not doing much. Any resilience greater than 0 would support up to there. That's the resilience greater than 0 case. Back to the original drawing I did. Just to pop up the 2 cases today. There was that, you know, there's the resistance from here to here. There's that resistance from there to there. You see it right here. So as it's fighting, resilience goes 0 on a hedge pressure break case. It's going to run to this liquidity pocket there. So that's the final target. So risk and reward, if you were bearish, if you were bullish, either way, tight range. This is what I'm looking for right there. Res is greater than 0 starting about an hour or so ago. So it's looking pretty solid. Anytime you support at half gap and resilience is greater than 0, those two go hand in hand, and then it's just a generic upward press there. I look at the 3 indices together. SPY is the only one that really has a resistance, so that's gonna be an one watch. Okay, let's do some scanner settings real quick. We're gonna head over to Zoom in a little bit. I want everybody to go to our Discord. All of you folks that have signed up for the free trial and all the new free trials today, welcome to the crew. Head over to the Discord really quick. Here's the link. Oops, that's the wrong screen. Let's go here. We'll do some scanner settings today, but I'll give you a quickie tutorial. I'll show you what the power of this is. Here we go here really quick. I like to keep one that looks for bull setups. I like to keep one that looks for bear setups. So in the Rocket Scooter platform, we have a scanner we're working on right now, what's called a monthly map module, which is going to be a special tool used to map out options on a month scale. I'm going to go here. I'm going to look for breakups on hedge pressure. I'm going to go here and I'm going to look for breakdowns and hedge pressure as well, just in case. So if you're looking for some bear setups, these guys are here. So when it says 0 selected, it tells you there's other parameters you can put in. So you can choose like auto. We're going to fix this to be a little cleaner, but essentially if I want to say hedge pressure has to break down for me to really want to see it, how much of a percent? Let's do like 0.25%. And I can select an amount that says I'm looking for it to break down that much. It's not visually showing, it's a little bit of a glitch there, but we just released the ability for you to have these collapsible windows here so that you can save some real estate. It's really nice and clean. So now I'm giving it, since we're bullish on the day, I need something that's going to break down hedge pressure, but a specific amount. So it needs to break down monthly by a quarter, or let's do auto. So these will be, this has to be true and this has to be true. This has to be true and this has to be true. So since we have breakdowns, you're not breaking anything. Nothing is breaking to the downside today. So these are really strong, powerful setups, and I'm going to look for anything that's also bullish on a breakup. So I'm going to look over here off to the side, like we opened bear, now we're in mean reversion. Anything that's mean reversion, I'm going to exclude. It's already hit a liquidity pocket. So like ABT, for instance, if I go back to my chart on ABT, actually, let me pop out an instance of the chart. We'll put a chart over here on the other screen. So let's pop out an instance of the chart. Okay, let's put this back in so we don't have to switch back and forth. Let's go over here, top left. So it's really cool. You can see the platform starting to come together with all these additional, like, you know, abilities for you to pop things out. And so let's see like this. I think this is still tied to the main chart. If I click this, oh yeah, that will be the main chart. That's okay. I'll just type it in manually. I think I'm gonna make a thing where you can link this to, like, you can call this number 1 and you can link this to number 1, so you can send it to a chart you want. Right now, since it's in the main platform, if I click CVS, it's opening CVS on my main platform, my main screen. So anything that's hit mean reversion, you'll see that it's already hit a liquidity pocket. We don't consider it. Like, I would not look for that as a play. Yeah, it's the play's already over. So like CVS, an example, already went to its liquidity pocket and that's over. We can see something that's a bear short down to bear long down. This is a great possible setup for a clean break if there is one. I just did an example. So what I'm gonna look for now, I'm gonna sort by distance to hedge pressure, something that just now is breaking out. The S&P is looking pretty solid. I wanna look for some things that are right on the edge, which is what we were doing a second ago. And these have already moved like 1% or 0.5%. S&P is kind of nearing its end for the day. So not really going to see a lot of things pop up rapidly. So if they start popping up, it will show up on the list at the top. So once something shows up and says 0, it's right on the edge. If I want to be very clean, I can add like a 0.1% buffer to make sure it actually has triggered 0.1%. So an example, if I make this, I need something that's moved at least 0.5%, right? It'll start trimming that list very rapidly to things that actually have to break and are breaking and going. So that's some flexibility, especially in options traders, to add like 1%. We've talked about SPY enough today. Give me 1 second. I'll chat with you a little bit. So right here, I want to leave it at 0 because I want something that's really just going to be around the edge to break. Let's put that back to auto. Okay. Auto. Okay, good. Now let's do distance to monthly, right? We'll look for things that are just now breaking through monthly. BSC to BLD, that's great, right? So AVGO is one we looked at a second ago. VRTX right on the edge, REGN right on the edge. Right, so had I had the scanner doing this in the morning, right when you break through hedge, it would show 0 on that list, right when it pushed, and that BLD is a pretty decent setup that I always like to scalp. Those are my favorite. One of my 2 favorite scalp are these hedge pressure to hedge pressure scalps. So if you want to look for these scalp plays, which is another trick I like to do, is you can actually use one of the scanner settings to do that. So let's pretend today I'm not looking for any bear setups. Let's look for those BLDs and BRSUs. These are what I call my scalps. And this is gonna be something we teach about in the scalp program that we're teaching. These guys right here are gonna be ones that are right on the edge. Like BABA has a 2% run between the 2 hedge pressures, and this is just now at around the edge of monthly. So it's around the edge of hedge pressure. So put Baba there, it's staring at like that range. Now the move has already happened. Of course, they'd be doing this right at the open, but you can see the move from here to here and here to here are both prominent. You can see both of them. You see that? So continuing to go, I'm gonna look for this. There's Verizon. I'm gonna look for something with a lot of market cap, like high volume. Verizon has a 60% run, or 0.6. Not that much, but at least it's something, right? So I want something with like a percent or so ability to move to give me a big wide distance to play on. V. Like let's look at Visa real quick. Visa's got a very large range to hedge against. Those are usually good swing trading candidates. Now Visa's in an illiquidity pocket as well, which is great. This is really hard to take a long from here. In illiquidity pockets, I do normally like to long through them to there, and it's going to hit a resistance. So it's not the best setup. So I'm going to skip that one as well. So I'm trying to find something that looks really nice and clean. And the scanner is just lovely. I love this thing. Micron, let's MU. Right. Nice, clean range with about a 1.3%. So in options traders, you try to think of percent gain because you're trading on delta, right? You never got your glasses? Wait, hold on. These are scanner parameters here. I should probably make these a little bigger. How about that? There we go. Is that better? So these I'm searching for all just basically bull setups, just to take any kind of bull swing setups or maybe bull day trades. These are my scalp setups, and I look for things that are trading between the hedge pressures. Let me just organize it like this. So I have an estimate for monthly maps. He said January 20th, give or take. So if you're here, monthly map folks, January 20th, the entire module should be out. I'm excited. Okay, so when I click tickers, those charts, I'm telling him what I want to do for the pop outs. Scanners will control charts. So one of the next things we're doing in the platform is orientation and configuration. So, you know, so the platform's gonna have multiple tools and widgets. We're about to do back tests. We're about to have a DOM. We're about to have, you know, options ladders. We're about to have trading capabilities, all that stuff as it's being released. Like I said, we're releasing it in stages, so it's not all released yet. We have to develop all the other pieces. But by the end of this year, you'll be able to trade on Rocket Scooter through different brokers. You'll be able to have a programmable watch list, programmable alerts, text alerts, Discord alerts. We'll have a custom Discord bot we're going to make. That's coming out. It's going to do everything from your account that you can actually ping Discord to send you alerts. You can program it yourself. It'll connect directly to the Rocket Scooter website and everything. Like, we're developing all this stuff, this new stuff. You tie the platform to your account, to your Discord, to your phone. So you'll be able to do a lot of stuff this year. Trade Planner's coming out this year, which is another module that lets you plan a trade and plan your risk management before you make a trade. So these are some things we're excited and happy about building. We appreciate all the support you guys have. You know, have given us. How do you, hey John, you've been here for a while. How do you like the look and feel of the entire platform? We've been secretly developing it for 3 years, so it's like kind of on the side. We never really showed anybody the designs, the names, the stuff we were doing. But compare old to new, right? Thanks, Matt. Yeah, Matt's been around for a while too. And since we're not doing like technical analysis as our focus, we didn't even care to develop charts. And your guys were like, well, let's get charts on it. And we're like, okay. So we white labeled just the charting widget from TradingView, which is literally the best charting on the planet. Why build something that is not crucial to your platform? So while it does take up a lot of screen real estate on the main window, there's nothing about this related to TradingView. It's just, we've white labeled their charts. So for those of you that like still use technical analysis, why I didn't want to spend a year building all this from scratch, because this stuff nobody uses this stuff here that much. So to make it very easy, we just needed a very quick stopgap. So why waste resources building the basic thing? So easiest thing in the world. I love TradingView. So when we were shopping around, we're like, we need to buy a charting library, right? And then we asked everybody in the team that was like, we want charting. And I was like, well, what do you guys like? And everybody goes, unanimously, everybody's like, TradingView. It's the best, literally the best web-based charting library on the planet. You just can't beat TradingView. It's so good. It's amazing. Yeah, there's like no comparison to it. So it's like the misnomer, you know, for people that don't understand programming or business or anything. I think somebody came into the stream the other day. I don't know. It's hard to tell because there's so many random accounts, but somebody was like, it looks like TradingView. Well, there's nothing at all different. It's just like TradingView's library, which we purchase. So, but we love sharing it because it's amazing. Like, why would we build something to compete against trading? You can't compete with this. It's the best thing on the planet. SR97, y'all gonna do features data soon. That's coming up in early March ish. When I tell you my targets kind of shift around a lot, is because we're constantly adjusting the 3-month scope. We keep pushing things forward because of monthly maps. So, and a couple of these bug fixes, but early March is the target for futures. Yeah. Try to incorporate the prop firms. Can't talk about that yet. Possibly. Yeah, you'll be able to do trading combines through Rocket Scooter at some point in 2023. Mum's the word. It's a guarantee. When we get futures data, you'll be able to do your futures combines and trade through our platform. Oh yeah. That's one of the, like I said, in 2023, we'll be creating partnerships with dozens of companies. So it's one of the things that we're excited about. That's all been being built for the whole last year as other companies are building their technologies and such. The estimate on the prop firm connection for Trading Combine is the summer of this year. It's a whole separate, I guess it's the first time I've mentioned that. So yeah, surprise, that's coming out. We'll be connected to the Tradeovate API. You'll be able to trade through Tradeovate. We've been working on that deal for like the last 6 months. You're welcome, Public, for your question. Yeah, SR. Wait, I remember. Were you a member before? I'm trying to remember everybody's YouTube names. SR. Are you the SR from Discord, or is that different? Who's your Discord? Are you Matt? Are you other Matt? There's an SR named Matt. Is that you? Wait, you're Matt that I met in Austin? Are you Matt? I was like, bro, it's good to see you again. I was like, it sounds so familiar. We've had thousands of people come through here this last year. I still remember hanging out with you, man. We drank beers at the, what was that hotel we stayed at? That was a really fun time. And I remember telling you, I was actually telling you and Adrian, all the guys out there, I was like, you know, what was it, last August, last September, and I was like, guys, you know, it's the trading platform's coming out really soon, and I was all hyping it up and telling you guys about it. I was like, just wait. It's good to see you, man. Okay, cool. Yeah, so let's talk about the window of opportunity really quick. So window of opportunity is a thing that you have to really understand. I think I'm going to pivot to Zoom so we can go over this. The window of opportunity tells you when markets are tradable safely. And we should have an entire video lesson on that. Do you guys want to have like a little free video lesson on it? Hey, Matt, send me a message in Discord real quick. So just have your name pop up. Loving all the constant improvements of the platform Discord, as well as the multi-chart feature still coming out. Not the TV version. We have our own. Click the pop out button, top border. Makes separate instances. So the next sprint, letting you guys know what the next sprint we're doing right now is saving your window layout. So they were trying to get that done for this sprint, for this Monday's release. The developers, they had their meeting last night, and I asked them basically, so just so you guys know, like I wake up in the morning, I'll be live streaming and trading next week, every single day for the challenge. But starting about like 11 a.m. to like 1, we do our Zoom call with the members. We go over any techniques and teach different things that the platform does, answer questions, get people going with their trials. And then after that, so Matthew West, there's another Matt. So SR97's name is Matt. My name is Matt. We have a bunch of Matts, so this is kind of cool. Let's fucking go, bro. It's Matt Friday. And John Gauss. And my first name is John. My parents always called me Matt growing up. John is like the family name. My mom wanted a Matt. My dad wanted a John. So that's how that worked out. So he's Matt. And we got Matt B is another Matt. So ever since I was a child, everyone in my family, it's actually Matthew. So that's what everybody's always called me. Matt for the friends. The only time I was ever called my first name was the first day of school every year when the teacher would say it and I go, it's Matt. I go by my middle name. It's a very Hollywood thing to do, I guess. But my parents also were very Catholic, so John and Matthew were very, it's a very Catholic name. Here's actually Matthew also. It's a great name. In Hebrew, it means gift of God. Catholic families like to name their children after the saints, so that's what it means. And it's funny, that's like all Matthews love to say that, right? It's just a goofy thing. Yeah, exactly. That's right. Matt knows that, so it's a funny thing. And my brother also has 2 names of saints as his name as well. And my grandmother was very religious. She used to volunteer at the church every week until her death. I'm not really practicing any. The only thing I'm practicing right now is trading. Okay, we're gonna call it a day. Portfolio, Greeks of theta and delta for options position balancing would be cool. Building stuff like that into like your positional data, like if you can tie into your portfolio and have a tool that tells you like if this moves to there, or like you could like basically the tool would be this. You could draw a line. If we could do this correctly, because again, we're gonna have to one day make our own charting library. Because there are, even though TradingView is really like the best thing out there, there are limitations to what we can do inside of it graphically. The ultimate, because it's a stopgap while we're building the scanner, portfolio manager, trade planner, integrating with prop firms, things like that, trading, all that stuff comes first. Charting is just like click a button, turn it on, and then program inside of it. So I'd want a feature that you can say, it knows where you bought your position, right? And you would go straight to where you are and you would draw like a line from here to here. And it would forecast the value of your position if it moved to there along this straight line over that time. Like I can say, what happens if it falls to here today? Okay, boom. And it'll say, this is what and it'll do the Greek balance. That's what I'm thinking, John. So you can have like you click a button, it automatically shows you what you'll do at a certain price and time. And also you can maybe click a button and say, was it volatile or not? And it would say, how much oscillation. So it can look for like how much, some kind of estimate of some kind of curve that you point from A to B. Straight line, a rally, a squeeze. Well, this is not drawing in real time. It's weird. Something like that would be kind of cool, right? But the hard part would be telling it how it gets there. So other than you like drawing something yourself with a pen and it creating like a curve fit, So like if you were to draw something with your line, it was to create like it'd have to like essentially like Excel, right? It'll have to do some kind of regression. It'd be very hard. You'd have to have some automated regression detection. Is this like a polynomial? Is it exponential? So the idea was that the pre-program, just like in Excel, right? When you have a data set and it makes a trend, we'll have to do like that kind of thing. So you would draw from A to B. What John is saying is a Greek manager. So an example is you're in your trading account and you own SPY calls. calls and a bunch of other calls, right? And you own 100 of those, and you wanted to guess what happens to those Greeks at the end of the day, or what's the value at the end of the day. So you have 100 SPY calls worth $2.50 a pop, okay? Per share. So what happens to these at the end of the day? And let's just put like, we're SPY trading right now. And so what my vision for what John is saying is exactly this. Price is here, and if I were to draw a line and say, well, my trade plan says that we go to here by the end of the day, and I would literally draw a line and a box would pop up and say, okay, they're going to be worth $2.90 by the end of the day. And what it'll do is it'll do the Greek balances. The problem is that most of the Greek balances are heavily dependent on what it does along the way. So it can do all of these things and the value will be slightly different. So you'll have to give it an estimated trajectory. There's infinite trajectories, so you'll have to give it a handful of selections other than me letting you scribble on a chart. But that'd be very impossible for us to use an algorithm to understand that. Well, it'd be very hard, impossible. So ideally what we can do is program 5 different modes. And you can like click exponential, logarithmic, polynomial to a degree, all the different things you have like in Excel, for instance. And if you pick like second order polynomial, then it would ask for a few more parameters like what's the high and what's the low. And you'd have to like click there and click there. And then it would draw like how many dips. I mean, it's very impossible. You were to tell it how to make a line, it needs to create an equation. That an equation needs to be plugged into all the Greeks, especially IV, especially theta. And then how far in the money, out of the money you are, it would have to really detail like every single moment you are in and out of the money in those calls. Very complicated, right? So in a rudimentary sense, you can calculate delta change very easily and gamma change very easily and actually forecast the changes in those over time. There's a lot of ways you can do it, but yeah. It's not easy to do, but something like that, the reason why it doesn't exist is not easy to do. It'd be very hard. Thinkorswim has something similar to plan the trajectory of options like that. We'd have to build something like that similarly. It'd be very hard to make. But when we run out of ideas, that'd be the great thing to do. Literally scribble how something moves, and then it tells you the value of your option at whatever point in time you pick. Which should have to forecast how those Greeks change over time, right? Oh, let's put resilience on the chart. Sorry about that. Okay, everybody, Destiny, head over to the Discord really quick. I don't know why it disappeared for a hot second there. Everybody head over to the Discord. We're going to go back to Zoom and we're going to go over scanner settings and do some other stuff today. We're going to talk about what we call the window of opportunity, which is when I trade and when I don't trade. This is the most important thing. It's a brand new, I guess a brand new term for it, but we've actually isolated it into a lesson instead of a bunch of places you go look. Res is looking nice and clean today. So at here, Res is looking clean. Now remember, we are in a rational hedge break, so this is usually delayed. If it does start to break and push lower, it's very possible that it could fall down to here. But it looks like today we are in support. So you're asking that because we're at half gap now. There's a risk and reward. You'd have to decide if you're long and you're shorting this. I personally don't short. If this is positive and that's positive, things are good. Is there a long opportunity off of here to complete the liquidity pocket with, what is it, 394.3 all the way to, what is this, 397.25? So you would do the risk and reward. I know why you're asking that, so let's do the risk and reward. Because it's irrational, remember, hedge pressure breaks. I'm going to do like a fraction of my position, like, you know, 1/5 of which I normally do. Something really small. Couple shares, couple contracts, nothing big because it's irrational. But from 95, I'm going to do pseudo trade plan. That's almost 2-to-1 trade, roughly, right? Tastyworks has something similar. Yeah, because like Tom Sosnoff built that for Thinkorswim. If you remember, Thinkorswim has that. And then, so, you know, he took the same methodology to Tastyworks. It's actually not bad. The one thing that they don't really get to correctly is that I found to be a little questionable, and hope I've never seen Tasty work, so I don't know if it's fixed there. But the there is no accommodation for put call parity, if you guys understand options, and Thinkorswim's options ladders. The IVs and the thetas and such reflect the lack of that. And if you understand Greeks, you know what I'm talking about, put call parity. They have very weak estimates of certain parameters for IV. Like there is, you know how, if you know how that works. The risk-free rate is one of the questionable items there. But I'm sure in 20 years, Tasty Works has improved significantly. I'd like to actually check it out just to see what it looks like. Those and they use other. I know in Thinkorswim, they like 3 or 4 different models besides just Black-Scholes for Greeks pricing. So you can actually have our Greek valuations. So you have like a bunch of different. Here's that trade setup we were talking about. Okay, everybody, really quick, let's go to Discord. We have a training session, members only, and free trials only. Do 2 steps. I'm going to give you 5 seconds to do this. Everybody go there, click that button. Number 1. Number 2, everybody go here. Click this thing as well. Okay, so here's the small account challenge. Let's go. Okay. This is what it's going to be. So this is the rule. The small account challenge is a challenge against myself. People are asking me, how do I join the challenge, or who's the challenge against? Nobody. There's nobody challenging me. We're not challenging anybody. It's me against Matt. Small account challenge has 2 parameters, not just account growth. So we have 3 total. Small account challenge is as follows. Okay, I'm going to have a 10K account start. And the goal is to get to 100K safely, not speedily, but safely. The rule is I'm going to follow my margining rule of this. Number 1, I'm going to follow margining. I'm going to get to 100K or 0 with the following margining rule. And this is the limit of the challenge. You can't go above this positioning or you break Rocket Scooter rules. So the idea is that if you're trying to create your own trading challenge, these are the rules that we're going to adhere to, so you must adhere to these rules. If you're like, I want to learn how to grow a small account, these are the rules that we all follow. You take the net lick of the account at any given time. This is not a YOLO thing. This is not a let me get there in a week. This is let me go for X amount of days and manage drawdown. Net lick divided by 1.1 maintenance requirement, which is the initial holding margin for clearing for any stocks of or any futures contracts of the CME. Long story short, I think the current S&P is 10.6. That's the actual value of maintenance. So when the S&P is like trading, whatever it is, this is the maintenance requirement. So you multiply that by 1.1. So this will be, I'm just doing it in my head, 0, 0, 6, 6, 1, and 1. I'm just multiplying that in my head, and let's move the decimal over. And so the answer is 11,660. So I'm going to take the net lick divided by this number, and that's the number of contracts. So 10K divided by 11,660 is roughly 8 in my head, 8.5. I'm just estimating 8.5. So let's, again, this is mental math. Let's see how good I was on that. Google Sheets. Be close. Is that 8.5? 10.60. I'm getting old. I used to be a mental math competitor in high school and elementary school, and all through school, I guess. I used to compete in UIL. Wait, 10,600 times 1.1. Yeah, that's right. And then I'm gonna do equals 10,000 divided by that. It's 8.57. Hey, that's close. Good job, Matt. Okay. So the goal is the starting position. So Ben, to give you a lesson on how that works, so the way that margin works in futures, like people have asked me to teach like a basics of futures, like how the futures market works. And it'd be kind of cool because it'd be cool to have like a video that teaches all these things. So how it really works is the CME group uses a program that looks at all the risks. This is one of the things that we talk about in our green lines and risk interval stuff. CME group sets this number as the minimum. It's called the performance bond minimum requirement. Essentially what that means is that when you trade against another trader, there's a thing called a clearing firm that's just kind of like, we like to think of it as a bookie, that requires that you both put into the pot that amount of money, or to hold a position. So when you're trading, you think about that times 1.1. We'll just say that coming in to enter the position, you need to have 11,660. And so does this person. You're longing, they're shorting, they both have to put in the same amount. Now, you and a broker are tag teaming, and they're in a broker or tag team. This is where margin comes in, or lending you money. The broker can charge whatever they want for maintenance, as long as it's at least this much. It cannot go below. They can always charge more, but they can't go below. So if Thinkorswim charges more, they're allowed to. They want to have fewer traders trading, they'll make it cost more for whatever their prerogative is. And there's reasonings for that, because say like a broker, and imagine like a trade of 8, for instance. You as a trader, let's do like a different effect. Broker plus trader, right? They charge you $500 a contract. Okay, that is not the margin requirement. That is how much they're charging you. Clearing still needs the full pot, so the broker is going to come in and put in 11,260 on your behalf. They will give you that money, and you both go in together. Does that make sense? That's how that whole system works. So for the trade to take place, you and your broker, so when you're 500 contracts, your broker has that cash on hand. It has to go to clearing. Does that make sense? Yeah. So your broker can charge you whatever they want. They still got to make up the difference. So if the broker is charging you $14,500, do you know why they do that? So that they can pocket temporarily while you're trading the difference between the two. $14,500 you have to put in to the trade. They're sitting 11,660 to clearing, and they now have free cash in their pocket to build a cash reserve to leverage to other people. They're loaning money from you when you pay over maintenance. Did you know that? Masterclass. I will teach a masterclass in futures at some point. So they can have more money to loan out to more traders. That's exactly why they do that. Is everybody's minds blown? That's how this industry works. It's okay. They're allowed to do that. It means you have the cash in the account, but no, maybe they're not loaning it and giving it away, but there is a cash buffer in that account a lot of times to make sure they have available cash flow just in case, remember Robinhood, GameStop. So they're making you pad more than you're asking. Now, what they do with this money, I don't know. They're only required to submit that much to the trade. So they've got an additional per contract, the difference there in their pocket. So they have a cash reserve built up. Just like when Robinhood went belly up off of the GameStop thing, they didn't have a cash reserve to satisfy margin calls, right? They now have a cash reserve to tap into because they're overcharging you for the trade. They're borrowing money from you. So if anything, it's safety. Like, again, I have no visibility. I can only speculate. But that money does not go, not all that money goes into the trade. There was no reason to put that. They're guaranteeing solvency. Yeah, it's pretty cool. So anyways, the rule number one is, oops, let's go back to here. It's a cool little thing. People, but the CME group only requires that because that's the only thing that's guaranteed by the performance bond. That's all that's needed for the trade to take place. And what the clearing firm does, if you want a good way to understand it, it establishes a cash swap between the two traders. So like trader here and trader here, one of them wins the trade, one of them loses the trade. And once you subtract the fees, the loser just pays the winner, and the clearing firm guarantees that cash swap takes place when both trades are executed and not exercised for deliverable of the commodity. And then after that, the clearing firm takes a little fee for that service, which is your clearing fee that shows up on your broker statement. So you pay a clearing fee for that transaction to take place, which is basically paying the clearing firm to require your other trader to be solvent so that you can get paid if you win. And that's required in the futures industry, because imagine that you bought an oil contract for 1,000 barrels of oil and the person that sold it to you was like, I don't have the oil, psych, right? You have to have guarantees that these contracts, because they're contracts, must be executed and enforced. So think of it like as an enforcement agency. In the retail trading world, you're just trading for cash settlement. You're not going to ever have commodities delivered to you. So the clearing firm satisfies the cash settlement between you and another trader, and you're paying a small fee for that. So the 3 fees on your broker statement is clearing fee. That's the fee that pays them to do that. There's an exchange fee, which pays the CME group to regulate them and manage this. Your exchange fee goes to these guys or to the exchange that you're trading on, which again, money goes up to the CME in all cases because they regulate the other exchanges, the NYMEX, COMEX, etc. But you're paying to those exchanges. And then you're paying a broker fee, which is paying your broker money to execute that trade on your behalf. Right? So those are the 3 fees you get. Anyways, back to this. I'm going to use this ratio, which means at the start, I will trade no more than 8.57 micros. So if you effectively are like, you know, I want to do a small account challenge or do something similar, tit for tat, right? Agreeable terms with myself. It's not a challenge unless these terms are met. So this is the first one. I must leverage properly to my net lick every day. This trick actually is designed to prevent me from over borrowing against what the contract's value actually is. If you guys remember the risk interval that we teach, right? You remember your doomsday bands that are like hella accurate? I'm gonna teach you guys something pretty cool. Oops. And then we're gonna get out of here. I love teaching stuff like this. Okay, and then we're gonna be over here. So you guys remember, if you go back to here on this doomsday stuff, there's no lie, the risk interval is the bee's knees of understanding the futures market. This has to do with futures margining actually. And so we exploit those performance bond minimums to give ourselves tradable ranges all day long. We call it DD. And there's another thing that comes with it. It's very impossible not to see that even when we have crazy catalysts, our fixed band that sat there since 6 p.m. of the previous night is pretty much the same tradable distance of this band. When that catalyst comes out, it goes up and down and hits those targets, right? Overshoots, undershoots, just a teeny bit. There's some magic to this number, and it's exploiting the risk of that margining. So ideally is that we understand that stable markets are going to stay within a certain range. If I go out there and start buying $500 contracts instead of the actual price of them, imagine this, right? This is designed for a $13,000 or $11,660 contract. If I'm buying them at $500 a piece, 11,660 times 2 is 23.2. I'm leveraged 23 to 1 off of that range. You're going to blow up. You should never do it. I see traders blow up all the time because they don't understand how to margin properly. Here's rule number 1 in trading futures. Ready? Never borrow money to trade futures. Never borrow money to trade, period. Don't use margin in an options account. Don't use margin in a day trading equities account. Don't use margin in a futures account. What's harder to say with futures because your broker just says it only costs $500 to trade. They're not teaching you how to trade. How do you cash balance your account? You buy the contract at face value and don't borrow on margin. The reason futures are over leveraged is because you didn't know that your $500 contract is not $500 worth of risk. It's a whole lot more. You're actually trading with this much borrowed money just to buy that contract, which represents a certain accelerated rate of the thing it's tracking anyways. It's already leveraged on top of the index. And then you're borrowing money to leverage even faster. That's why you can watch, that's why futures accounts blow up in hours of time. You have to properly leverage. If you don't properly leverage, you don't understand how to trade for longevity. And it's a big part of what the challenge is about, is to show you proper leveraging. We all good on this? So I'll follow this rule discreetly. As the account grows, the micros will grow. What that will do is say that I go straight there, my drawdowns will be a fixed ratio of the gains. It'll fix the drawdown percentage if I fix the leveraging to cash equivalent of the contract. That is rule number 1 of small account challenge. I will not violate that rule once to accelerate the pace of the challenge. Not once. Number 2, I'm going to look at the win rates, the overall win rate. That's challenge parameter number 2. The last small account challenge, I bounced between 60 and 85% win rate. I think when I ended it, it was like 60 to 63% win rate over the course of the year that I did it, or close to a year. So the win rate, I'm gonna look for a win rate improvement of like greater than 60 whatever percent last time. I'm just gonna estimate, let's just say 60. So I'm gonna try to get greater than 60% win rate over the course of the time it takes to get there. Following this leverage roll, you're not gonna see me YOLO. So speed is not the contest. So I want you guys to join for the journey instead. And then the third parameter, these are trader stats you need to understand. This is proper leveraging. So the challenge will have, I'm setting my own boundaries, right? So when you guys are doing like trading combines, they give you strict parameters to follow, right? You have leveraging, you can only trade so much. We're gonna only trade so much. The win rate is not usually a parameter in a combine, but that's just to show control of trades. Control and accuracy, right? Well, control mostly is loss, but control most likely accuracy, right? And how good your technique is. Control, accuracy plus skill. Is your skill or your system or your style any good? So these are metrics for that. This is metrics for proper leveraging. And the last thing is going to be max drawdown as a percent of net leg. So from point A to point B, if I make it, the max drawdown I ever faced percent of net leg, which is to a metric of position management. Trading is not about, having, like some traders, right? This is what Twitter is like some traders are like, here's 0. And it's like, look at these 3 weeks. I made all this money. And it's like, well, what happened there and what happened there? It's not going to be like, let's draw a box around my best 3 or 4 months. It's like from A to B, the max drawdown of net leg. So it's going to be showing how I get there. Did I have good position management or not? And so all 3 of these things are required for my challenge to myself. And I'm going to make sure I follow them very strictly and not break any of the rules. I'm not setting a percent of max drawdown. That's just going to be my final metric to improve on. So I can't say I'm going to give myself a max CD of 10, 20, 30, whatever percent. My normal max loss of a day, I tend to not let myself ever go beyond. Well, I try to stop very rapidly, so hopefully less than 5% or whatever. But my max loss, like in case I have deer in the headlights or something just nukes me out and I wasn't paying attention is 12.5% on a single day. And then that's only for a futures account, by the way. It's not a stock thing. I'm much less leniency on stocks. It's like if you go to the bathroom, you come back and your account's down 15%. You're like, whoa, what happened? I cut and run every time. But this is max drawdown in general. So this would be a multi-day drawdown. I'm going to hope to, obviously it's going to be hard to say in these conditions what's available to max drawdown. But I'm going to monitor and try to see if I can always be constantly optimizing and tweaking it. But if you're like, I'm going to go, like all you guys here in Rocket Scooter, you might be like, ooh, I'm going to go tit for tat with Matt. Let me challenge Matt. It'd be fun. That'd be a kick-ass thing if you're a Rocket Scooter member, just so we can like flex biceps at the end of the day. These are the 3 metrics I want you to do. Number 1, never violate number 1. You must max position size. Never go above that rule so that everything can be on equal playing field. Max position. Number 2, I'm going to try to get, we'll flex on win rates, but at the end of the day, 60% is my personal goal. Number 3 is, smaller max drawdown. And so those of you in Rocket Scooter who are like, I want to do my own trading challenge, and then at the end we all compare results, we'll learn from each other. Like, oh, how did you get a higher win rate? Oh, how did you get less drawdown? And then we come through and maybe we collaborate. Maybe there's a style you have that I can learn from. We drew a massive crowd during the last trading challenge. This is gonna be really fun. Let me take a picture of this so I can. And so anytime you go to 0, the challenge is over. 0, challenge over. Or you lose. Challenge over. And after 20K, let's make this a rule too. After 20K, rule number 1, at 0, challenge is over. Number 2, at 100K, if rule 1's never violated, you leverage yourself properly there. So no YOLOs, right? This is, we're going to collect data from people in Rocket Scooter. What system did you use? What style did you use? Like, what did you do to have a proper goal? It's not, I don't want to look at people's stuff to say, hey man, I made 100K in like 3 days. Because I bought, I threw 20 minis into the S&P on a rally and just flipped a coin. That's not useful information. We're not going to learn anything from you other than stupidity. Number 3. Greater than 20K net lick. K net lick. Remember, I'm giving myself parameters. A 50% drawdown is a disqualification. If you lose half the account at 20K, anytime you're past the 20K mark, equals disqualified. So this is an additional hardship that I'm placing on myself to tell myself if I start losing, if I start going up and then I pass the 20K mark, I'm start like losing. So remember, above the 20K, anytime you have 50% drawdown before you start recovering, then you're disqualified. So say I go to 20K, that triggers on, I lose 18%, okay, we're fine. And then the drawdown ends and I start winning again. Okay, then that rule is no longer applied. And I'm also below 20K, so it doesn't kick back on until I'm up here. That's to give flexibility at the start. Give you some fat before that really kicks on. But if you're like at 80K and then you drop the 30 before you start recovering, like rapid losing days, you're just DQ'd. There's no skill there. It's not worth monitoring at that point. So these are my challenge for myself. Should I add anything else, you guys, or not? These are the parameters I'm going to use for Tuesday when I start. And these pretty good. I know it's a lot, but. So can I get to 100K, staging there, properly leveraging, maintain a 60% or more win rate, and max drawdown of net lick as a metric for like us to compare to each other, like you guys in Rocket Scooter. And it's open to any Rocket Scooter member if you guys want to say, hey, let's go for it. Now, you're not copying my trades. That's one thing you're not going to do. But if you have your own style, your own thing, you're like, that'd be fun. And then all of us get together at the end and learn from each other. That'd be kind of cool. No secret shadow challenges. You have to say by Tuesday, I'm in, let's go. These are the terms. And if you don't say these are the terms, I follow them, then there's no challenge. Or we'll just do it myself. I don't trade overnight. Oh, that's rule number 4, no overnight trading. Oh, let's make a few more rules. All trades on stream. All trades streamed. 100%. Live. No camera tricks. Live. And broker statement must be posted. You must post a broker statement. Not a third party, this and that. Not a picture. Broker statement. I don't want to see people's like snapshots from a trading platform or third-party trading platform. You must provide broker statement. To not produce a paper statement would be, I mean, a broker statement would be assumed paper trading, and to feign a fake contest while paper trading against a person that didn't know they were in a contest is actually libel, and we could always obtain the broker statements anyways through that lawsuit. And that can become public. So we can't have any cheatery here or anything like that. All trade stream live, broker statement must be. And then the last thing is no overnight trading. Overnight trading is stupid for futures. Shouldn't use something from Rocket Scooter? Maximum daily drawdown percentage. That's a really strict, actually, believe it or not, John, that would be making this challenge way too hard, I think. My max is 12.5% max, and it never really should go there anyways, but that's like I went to the bathroom, wasn't paying attention. Let me get a photo of this. Must post a broker statement with broker letterhead. All right. Must be Trade8, must be Thinkorswim. It has to be like, these are the results. Does it have to be something from Rocket Scooter? It should, but it doesn't have to. It's just a trading challenge to say that you're properly trading. That's the whole point, and that it's real. It's really all that matters. And all trades must be streamed. No off-camera, no camera off-camera tricks. Like, I'm not going to show up and be like, you know, oh shoot, I lost $10,000 on stream, and then I magically appear the next day and it's like, oh, but I went up 15,000 off camera. There's none of that. No camera tricks. And the broker statement will verify that I'm not going there tweaking my sim account, which is what happens to a lot of Twitter guru type peoples, right? So there's gonna be no camera tricks. You won't be able to contest anything. It'll be 100% verified, 100% real. Pass or fail, everything will be real. With really strict rules I'll follow. The last challenge, I took a couple of big drawdowns before I had all the tools I had now. So I have so many tools to risk management, it blows my mind. Like how much I was missing even 3 years ago, 2 years ago, 1 year ago. We were learning how to profit using indicators. It would be I'm trying to bust them. I'm so blind. Oh, well, yeah, mine's gonna be Rocket Scooter. Mine's gonna be like, I'm using Rocket Scooter for this challenge. That's it. Mine will be that. Yours can be whatever you want. Yeah. Hopefully Rocket Scooter, right? For risk management. John says how the combines get you. Yeah, I didn't say that, but that's why. That trick is how the combines get you. That makes it very strict, and that's what gets most traders. A daily drawdown value is a max daily drawdown percentage is like all it takes is 1 day, and a percentage means your drawdown can be bigger each time. So imagine this, right? At 10K, if that percentage was let's say that's 5%. You lose 500 bucks, you're out. But at 100K, if you lose 5,000 bucks, you're out. So with the same contract, if you can only have like so many contracts, the percent loss of the contract is higher at the higher end of the spectrum, but the total flexibility you have on that drawdown percent is smaller at the start. So a fixed drawdown percent per day is how you squeeze traders out in the first month. It's a business trick, if you may. Fixed drawdown percent is the bent basketball rim at the carnival. So I won't do that to myself. It's impossible, not to say impossible, but near improbable to enjoy that challenge while you're trading. It will be so stressful to constantly have to fight that right on the edge. Because futures markets can get wonky sometimes. You set a personal limit, and if you pass it, just start getting out of your position. But the idea that challenge ends or your combine fails at that particular junction, like a snap, it's kind of like, yeah. Okay, call it 8. We're going to go over to Discord. Everybody go to Discord. We're going to talk a little bit more. Like I said, if anybody wants to join the challenge, be like, ooh, I'm going to join the challenge. I'm going to follow all those rules. So those are the rules we'll follow. Those are the terms. I'm going to stick to them. You guys can watch it pass or fail. And if it's fail, we'll recoup and start over. We are massively growing. Total subscriptions to Rocket Scooter, getting close to having 1,000 people join our ranks. Our Discord is getting like 3,700 something people. Our Discord is free for now, but in a couple of weeks, you're going to see massive changes to that. Discord is no longer be part of the public. We're going to have a different thing Rocket Scooter is releasing, so stay tuned. You guys are going to love it. We'll see y'all later. Go to Discord. We'll start in about 5 minutes talking about the window of opportunity. Let's go. Window of opportunity is when I trade, when I don't trade. I know windows of time that are okay and windows of price that are okay every day. It's like a region of the chart that I only act in. We're going to teach you that really now, literally now. Go there to the Discord, 5 minutes. I'm going to post the link in chat. You will not be disappointed, I promise, learning this. This is something that saves my ass on a daily basis. When not to trade, when not to trade, when not to trade. 5 minutes, Discord lesson. Go. See you in a little bit.